Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1024th edition of Short-Term Trading Live with Oscar Carboni, and that would be me. Hello, traders. Again, video number 1024. This video is going to keep us in tune with what should be happening in the gold, in the soybeans, in the S&P, in the NASDAQ, in the markets, commodity markets for this week moving forward. Particularly, this video is being filmed on Sunday night for Trading Monday. That is May 20th, 2013. Traders, remember that futures trading is extremely risky and can cause substantial financial loss. Futures trading is certainly not suitable for all trading accounts. Never trade without stops. All right, so where are we? Video 1024. We are looking at Sunday night, May 19th for trading May 20th. You are looking at the gold. Traders, I told you in my last video that this would be the death knell for gold, getting below the 200 bar moving average. It got below once, ran back up, and spent 2 weeks above. On the third week, it got below, and last week they pummeled it. That, my friends, is the death knell. We're looking at the weekly gold chart. Let's look at the daily. Traders, the daily gold chart. If you recall, I've been showing this chart to you in many, many videos, video after video. At the price of $1,780 an ounce, OMNI warned us about a possible wiggle, a possible top. We got to $1,680 an ounce, right about here where this red line is, and OMNI said that is it. The top is in. I started doing videos about the top, and OMNI started selling gold ever since. Look at what gold has done. Down, smashed down. Another big, huge drop. But here's what's interesting. It gets below this parallel channel, right? Look at these spike bars when it gets below. What does it do when it comes back up? It rallies up. Boom. It hits that particular bottom of the parallel channel, stops cold, traders, and comes down. Wow. That is technical analysis running on all 8 cylinders. So it hits the bottom of the channel, which is now resistance, and drops. So wow, gold looking like it wants to go much lower, and that is our opinion on silver and gold. Traders, then there's soybeans. The soybeans daily bar chart you are looking at now. Thank you, 200 bar moving average, because the 200 bar moving average will absolutely get the attention of fund managers around the planet. And look what's happening now. You've got soybeans decisively above the 200, and then even better, watch this. Just started to take out some major resistance line. A good resistance line hits 3 valid points. Look at least 3 valid points. Look at these 3 valid points that are hit last week, this day, that day. This soybeans is breaking out, traders. Looks fantastic. Let's go look at S&P. The E-mini S&P, traders, look at this chart. The F flags are flying all over the place. This chart continues to speak for itself. ESM 13 daily bar, you have F flag after F flag after F flag. They are just continuing all the way up. We're in an F flag now, and we expect this behavior to continue certainly through Monday, the 20th of May. Let's look at NASDAQ. Traders, looking at the NASDAQ, a wonderful parallel channel, or if you will, one of my F flags, looking fantastic. And the market is as bullish as can be. And traders, you know what? You can take this parallel channel right from the bottom here, and you can see that we are still steeped inside of this parallel channel, looking fantastic, and a secondary parallel channel has developed. We're steeped inside of this red one, and the secondary one has developed. So let's make this bigger. All right, look at us, and we'll change the color here. Look at how well it's holding inside of both of these parallel channels, traders. The NASDAQ looks fantastic when you look at the daily chart. Let's look at the Russell. Traders, the Russell 2000 steeped in F flags. You cannot beat what this chart looks like right now. We are looking at F flag after F flag, or parallel channel after parallel channel, however you want to look at this. And if you look right here, we got above this major resistance line, right? 3 valid points. was a major resistance line, which kept this market in check for quite some time. But since then, we've gotten above it in a big way, and now we have our F flags. So you gotta love the Russell, you gotta love the NASDAQ, you gotta love the emini S&P. You gotta look for more upside, at least for Monday this week. Let's go look at the tranny. Traders, the Dow Jones Transportation Average. You have a bull flag, this red bull flag, morphs into an F flag, the one that we're in now. You cannot beat this market. It looks absolutely fantastic on the daily. Then there's the weekly. Look at the weekly transportation average, a huge, huge inverted head and shoulders in the Dow Jones Transportation Average. The whole time the shoulders are maintaining their posture above the 200 bar moving average. The projections are over 7,400 in the transportation average. Way, way up there, over 7,400 are the projections off of this inverted head and shoulders in the transportation average. Let's go look at the industrial average. Traders, the Dow Jones Industrial Average daily bar chart. Look at this beautiful parallel channel. I mean, you could not ask for more as you watch the market go from the bottom to the top, right? It's the bottom, top. It goes from the top, makes its way almost to the bottom, starts heading back up towards the top, makes its way almost, or actually hits the bottom, makes its way back to the top, and look at what it's doing now. It's got to be heading up here. A long, long way to go in the Dow Jones Industrial Average on the daily. Let's look at the weekly. Traders, the Dow Jones Industrial Average weekly bar chart. Look at this chart. This is another inverted, monstrous inverted head and shoulders, well above the 200 bar moving average. The left shoulder has a very well-defined head and shoulders in it. The head has a very well-defined inverted head and shoulders in it. The right shoulder has a very well-defined upright head and shoulders in it. And the projection is greater, much greater than where we are now. These markets look fantastic long-term, even if there was to be some sort of a pullback. Now I'm going to show you a chart that should really interest you, traders. We are looking at the 30-year bond chart, and before we go to today, the present, let's look back 1984. Traders, look at this monstrous parallel channel, right? Back in 1984, we hit the bottom of it. In 84 to 85, we go and hit the top of it. Then we come back down and almost hit the bottom in 87. Then we head back up and almost hit the top in 1993. We head back down and almost hit the bottom in 94. We head back up. Actually, we did just about hit the bottom. Here we almost get to the top. You see the theme developing? Look at this. Every time the bonds go from the top, from the bottom of this channel to the top, they turn around and race back down again. This has been happening since 1985. So if we continue to look forward, in 2009 we hit the top. Right before that, in 2008, we hit the bottom. So here we are present day. I say the UST bonds are being dealt a death knell here. We went from the bottom to the top. Then we came back from the top to just about the bottom. And then we went from the bottom of this to the top. And now we have a head and shoulders, traders. Left shoulder, head, right shoulder on a monthly. Extremely meaningful. If it cracks, we should go from the top down to the bottom. Minimum 120. I say we go lower than that once this begins, but you are looking at what most likely is the right shoulder and the final death knell in bonds forming before your eyes. Now let's take a look at this S&P chart. Traders, no triple top. Not gonna happen. Sorry, not this year. Who are you gonna call? Not the triple top Ghostbusters, that's for sure, because look at this. Top gets made in 2000 to 2001, comes screaming down. Another top, exactly the same area, gets made in 2007. We all know the infamous top before the crash comes. We're bam, down to 666. Rallies back up, but look what it did the third time. It went here. It went here. When it went here, it said not a chance. Traders, the monthly blew through on the emini S&P. There is a long, long, long way to go here. And traders, don't forget, on the daily, this market looks absolutely fantastic. We are buying the dips in the E-mini S&P, in the NASDAQ, in the Russell for trading Sunday night through Monday. That would be May 20th, 2013. Traders, thank you so much for coming to my video number 1024. Thank you so much for watching these videos. This video should keep you in tune for where markets are going this week, certainly for Monday, Tuesday. Always remember to keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Traders, thank you so much for showing up. And don't forget, we are continuing to buy the dips in the E-mini S&P. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.